Worldwide markets this week. Oil, bad news for global economy. Tariff D-Day is 3 weeks ago. PGMs, Boeing, Chinese and Indian cars. FOMC later tonight. Structured products, gold and China. I'm Simon Brown. This is Worldwide Markets episode 435 for 18 June. I am recording late Tuesday afternoon. Worldwide Markets powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. Thanks to Shift and Standard Bank for sponsoring Worldwide Markets. So the big story, I suppose, really is around the events happening in Israel and Iran. We have Israel essentially started, was it Thursday evening, attacking Iran. We know that story. I'm not going to go deeply into that, but there are implications for it. And the key implication perhaps is going to be in the immediate Brent and gold. Markets had a bit of a wobbly Friday. They recovered Monday. We were closed on Monday, and now we read on Tuesday. But what we did see certainly was a response from oil. And interestingly, oil moved fairly strongly up through that, what had been resistance forever and a day, at around about the 70 level, as recording Brent 75.06 is the price. And if it continues going, I mean, 88, maybe 90, and then through there, we're heading up to close to 100. I don't know what target's going to be here, but I do know gold has sort of held above the 3,400 price point. Oil has held. U.S. equity markets bounced back Monday. At this point in time, and to be clear, I'm no expert in wars by any stretch of imagination. Obviously, Iran is a big oil producer, but more importantly, the Strait of Hormuz, which is where about a quarter to maybe a third of seaborne oil travels, oil from Iran, Iraq, Saudi Arabia, all goes through those particular straits at the base of the Persian Gulf into the Arabian Sea and then off onto the rest of the world, wherever it's been delivered to. It's not just Iranian oil, of course. That's the trick here. Now, I mean, what could they do? I mean, they could put some military ships in there, but surely Israel would attack the ships. Would America get involved? They could mine that strait, I suppose, and try and stop it that way. I don't know how effectively they can, but that certainly is the concern that everyone has at this point. And it's quite simple. We've seen a slowing of global GDP. That's largely thanks to the tariffs from President Trump. We've seen inflation coming down, although perhaps less fast, certainly in the US, maybe Europe there in that sticky point. South Africa looking good. We've got inflation data out Wednesday. It will be late morning. We'll get a sense around that. But what we are seeing is, I suppose, a fragile economy. And, oil at current prices, and it had moved from mid to low 60s, oil at current prices is going to put our petrol prices up for us and the rest of the world. Never mind if it goes a whole lot higher. It's also the shock nature. It's one thing if oil slowly over weeks, months, whatever, drifts higher. It's that shock nature if it suddenly jumps higher. Now, Saudi Arabia can temper all of this quite simply by pumping more, but they've got to go through those straits. And that is what the world is right now worrying about. That is the key focus. What are we seeing? The conflict, does it continue? How long does it continue for? And does oil supply get disrupted? Talking around the tariffs, we're 3 weeks away from D-Day. At the G7 in Canada over the weekend, Trump did say that he had some deal with the UK. I haven't seen anything about it. They've apparently got a deal with China. It doesn't look like much of a great deal, but they're getting some magnets and rare earths and 55% tariffs on China. That seems to only perhaps be for 6 months, certainly from the Chinese side. But that's all we've basically got is the UK and China and nobody else. And we are 3 weeks away from the 90-day deadline. What happens on 9 July? Look, I will be on the beach in Durban, so I'm not directly, I'll worry about it when I get back from our week off. But what's Trump going to do? I mean, is he going to bluster? Is he going to bring back those crazy tariffs that he had before? Remember, it's all now sitting on 10%, which, except for China, and then some other bits and pieces, aluminium, steel, and the like. What happens in 3 weeks' time? He's certainly not going to roll out, I don't know, 20, 50, 100, 150 tariff agreements. Undoubtedly, surely they've got some level of deals with some of the smaller but important economies. I'm thinking Vietnam and the like. I don't know. I just don't know. I don't know. It is very much a case of we wait and see, and we will find out eventually in time. I think it's going to be messy. We've got a JC Power Hour this Thursday, 19 June. Gold, know when to hold it and when to fold it. So Goldman Sachs back in April said $4,500 for gold. We're at $3,400. So not too bad. Merrill Pick from Old Mutual Investment Group also has a theory, a process which gets gold to around about that price. What we're going to do is we're going to talk around the story behind gold, but more importantly, gold versus miners, when to hold which or both, when to not hold them, when to sell your gold miners, how much in a portfolio, which are my preferred. We all know the GLD ETFs, local and New York, but there are others with slightly cheaper total expense ratios. And there's also a Standard Bank auto call structured product on the gold miners. I'll talk more about that in a moment. So a lot happening there. JustOneLap.com/events for more information and booking. So I was in Dinga over the weekend, just enjoying a day out in the reserve and having a braai and the like. I got to say, it's weird, braaiing surrounded by wild animals, and particularly because my wife eats game only, so we're braaiing kudu and the like, and well, there's kudus wandering around. Off topic. Anyway, anecdotally, I saw a lot of Chinese and Indian vehicles. Now, make no mistake, I saw a ton of Hiluxes and Ford Wranglers and Nissan Navaros and all of those. Absolutely, I did. The Mahindras, I saw a number of those Mahindra Buckies, some of the old style ones from many years ago, a couple of the very new style ones. I just saw a surprising amount. Now, I mean, I don't drive much on an average day. The studio is about 6 minutes away. I live in the middle of Rosebank. I've got a studio at home, so I'm not out there in the streets of Joburg often. I was just frankly surprised at how much I saw, and particularly, and to be clear, I was in a game reserve where you can do it in a sedan, but the roads are fairly rough after those April rains. So there was still some fairly good dongas and low bridges with water and mud piles and everything. So yeah, sure, you want a vehicle with high clearance and ability. There were a lot of them. I don't think I've ever seen so many of those Mahindra Buckies before. I was digging around the Karoo one, and it's what, 650 odd thousand. Get a Hilux for that, but it's a bare bones Hilux, whereas with the Mahindra, it's got everything in it. And I know some of you are saying it's missing that and the rest. And sure. But, a kitted out Hilux is what, close to $1 million. That's a 650,000 Indian. It was just, as I say, completely and absolutely anecdotal. I'm not saying we should all either rush off and buy Mahindra or Mahindras or whatever the case may be, but certainly stuff was happening there. So I want to touch on the Indian air crash last week. And again, I am not an aviation expert. I don't know what caused it. I know it's a tragic loss of life. But I want to talk more about Boeing. Boeing has been a fair bit of a horror stock for a while. So it's pretty much, I mean, it's at the $200 levels. This is a price point it got to in July 2017, so 8 years ago. They did that merger takeover with McDonnell Douglas, and things just went pear-shaped. And I'm saying this because I've read tons of articles. In fact, I've read a book on it as well, and I've heard podcasts. They became bean counters. It became all about the Excel spreadsheet. We know what happened with the 787 MAX, a bunch of accidents there, which was directly Boeing's fault. Now, in this Dreamliner, it's the first total body destruction of a Dreamliner. We don't know what happened. We don't know whose fault it is. And ergo, I'm not saying that it is Boeing's by any stretch. We simply don't know. What I do know is that this is a stock that I think is frankly almost uninvestable. Now, I know Trump is doing deals and the UK is going to buy 40 Boeings and China is going to buy 200, et cetera, but they certainly seem to have a fairly significant culture problem, I think. And yeah, the one book I read talks about the problem is they haven't built a new aircraft from scratch in like 2 decades, and they've lost that skill to do it. Those engineers have retired out, gone to Airbus, the Brazilian company. There's a Chinese company making, they're making narrow-bodied planes, not the wide-body, but still. Interestingly, the market thinks they're great. We've got no sells, no strong sells, 9 holds, 16 buys, and 4 strong buys. Target price averages to 219, highs 260, lows 150, prices 200. I just can't see it. The price didn't collapse at all. A little bit of a sell-off last week, but I mean, not a collapse by any stretch, but just a company which I think has, lost its way, I suppose, is what we say, and shareholders are paying the price with the stock that's gone nowhere in 8 years. And when those 787 Maxes started crashing, their response was everybody else's fault, not us, and that in part talks to you about culture. Absolutely, it talks to you about culture. A ton of folks have been asking me about Sasol. I should have touched on this, I suppose, when I was talking around what's happening in Iran. Obviously, oil higher. Sasol is absolutely loving it. At this point, Sasol is, so this is Friday's close. This is not a live price at all. Sasol is trading a little bit below that resistance, which is now popping up its head, sort of from just over 100 up to about 104 and some change. That's where things get interesting. We do have 1, 2, 3, 4, 5 green weeks in a row. At some point, we'll see some pullback. Pullback could get sub 80. I'm not sure about that. What would I be doing in this point? I don't hold Sasol at all. I think that 100, absent of oil continuing to move higher, I think that 100 starts to perhaps hurt a bit, and we'll see. We'll get a sense of it, but I think that's going to be a tough one to get through. There are a lot of what I call stale bulls out there, and now suddenly my live price won't pop up. Okay, so we're not going to get a live price. There are a lot of stale bulls. What's that? It's someone who bought 200, 150, 100, 70, whatever, and they just want to get out. They want to get out at a lower loss or a break even, which means there's a wall of sellers as stocks like this that were so heavily loved but were falling down. And not just loved by the Twitters, loved by, held by Old Mutual, held by John Picardi's Investec Value Fund, etc. But so highly loved, and I don't think Old Mutual and Investec are initially bailing. Maybe they are. I have no insights there. But this is a stock that a lot of private clients and other fund managers are going to be like, I don't know if we still want to be holding this. And if we can get it out at some price, we should. So at some point, expect things to start to come back, I suppose, is the key point. Let's have a quick check-in on the PMGs, Palladium and Platinum. They've been running. Let's get a look at how they are looking. Let me get to share that screen. They are, so this is Palladium. It is, it's staying at that resistance level of around the 1,070. And that's an important point for it. Platinum, which perhaps had been running a little bit harder, is, hello Platinum, there we go, there we are. Platinum is back a little bit, but nicely above that resistance level, which it had to get its way through, which was close on 5 years of resistance at about 1,050 to 1,100. It is down on the highs of last week. It got to 1297. It's now down at 1252. That's still a chunky number. Make no mistake. In other words, this PGM rally is still holding, and that's very important and very exciting for a bunch of folks who are long. I've got some in Sibanye Stillwater. And then FOMC, Wednesday evening, 8 o'clock is the announcement, 8:30 is the press conference. What do we expect Jerome Powell and his team to do? Nothing. Particularly with a higher oil price. We've seen inflation last week was slightly better, 2.6. Expected was 2.7. Previous was 2.5%. But still, and I was saying it 2 years ago, getting inflation down initially is easy. It's that base effect. It's that last bit that is sticky. And with tariffs starting to kick in and seeing oil higher, I don't see Jerome Powell cutting at all. I just don't see how that happens. And then we've got some structured products coming out of Standard Bank. If you're a Standard Bank client, you can grab them there. Otherwise, speak to your stockbroker or your financial advisor. There are two of them. The first is the China one, 100% capital protection. So you will get your money back if it is negative over the period. The period is 5 years. So if over that 5-year period, the index is negative, you will get your capital back. And then if it's positive, you will get 125% participation. So if it's up 10% over the period, you will get 12.5%. I quite like this one. In fact, I very much like this one. You also, interestingly, they are using the Satrix ETF. So at the end of the period, you will essentially get the Satrix ETFs into your account. It is a minimum of 25,000 Rand for participation. It is in ZAR. I'm not going to go through all of these details here. I'm just trying to find the date at which it sets, which I think is 11 July. Why can't I find that nice and easy? I'm going to say it's 11 July, so we've got some time on that one to still make up your mind. As I say, it's giving you exposure to China, 100% downside protection and 125% upside. And at expiry, you will get the Satrix China ETFs. My niece and nephew own some Satrix China ETFs, so I'm probably going to exit those. And I think they're at break even, so there's no tax implication. Exit those, the transaction fee, and then put into this. And then worst case, I get money back and I get the ETFs. Best case, we get a bit of upside gain as well. There's also a gold miners ultra call. This one, slightly different. If the index is down 30% or more at the end of the term, which is 3 years, then you take the pain. If the index is down between 1 and 30%, you get your money back. So there is some capital protection. You're not getting any of the geared to the upside. You're getting basically a 6.5% coupon every 6 months. It is over a 3-year period. What's important here is that it can auto call. So Standard Bank can call it, pays you out the money and say, we're all great. It's going to be tracking the Vanek Gold Miners ETF. So really you need to be taking a view on the gold miners over the next 3 years. How is that going to be doing? As I say, you've got some downside protection, but it is limited downside protection. This one, the strike date, they talk tax implications. That's not massively our concern. The strike date is next week, so you need to get jumping if you're interested. I like structured products if they are the right one for you. Make sure it's the right one for you. If it is the right one for you, then I think these are great. I especially like the China one. I think that looks really, really good. And the last thing before we sign off today, Cricket World Champions. Test cricket is the best game in the world by 100 miles, and we won it. To Temba Bavuma and his team, I mean, not even congrats, more than congrats, just awesomeness, just absolute awesomeness. Well done to everybody involved there. We'll park it there. My name is Simon. We will be back again next week as always. If you can, look after yourself, and if you really, really can, look after somebody else as well. Until next week, cheers all.